All right, everybody. How's it going today? Welcome to one of the most interesting classes that you guys are going to take. Lesson number 6, an introduction to Elliot wave theory. This is going to be the bread and the butter strategy of mine, and it always has been for a tremendously long time. So I hope you guys have thoroughly enjoyed lessons 1 to 6 so far. I know that it might not be moving at the pace that you intermediate and advanced traders might be wanting it to move at, but we have to establish the fundamentals before we start jumping into my specific strategy of scalping. So I'm here to share with you guys basically my strategy and what I use, right? How am I able to make some days, 500, some days 200, not as much, some days $5,000 of profit? It's because I'm extremely patient and I look for a key list of ingredients that will make up the recipe for a successful trade that yields a very high probability. All my profits are public, as you guys know. I post literally every single trade of mine. Sometimes I don't catch it on video. Sometimes I only post a screenshot of the actual trade. But as you guys know, in September, $42,000 profit. In August, $28,000 profit. July was a very slow month for me because I barely worked since I was moving. And there, I still made $19,000 of profit. American, right? Which is a lot to a Canadian. So if you think of the profits, and it goes way higher than that from the beginning of the year. I just wanted to give you guys 3 months of solid data. So how am I able to do this, guys? I just answered it. It's because I'm really patient, right? I'm extremely patient, and I wait for these trades to come to me. An Elliott wave is going to be one of the fundamentals that you highly need to understand. Now, I'm not here to teach you guys from a professional standpoint of how Elliott wave is broken down from theory-wise. I'm here to teach you guys how I use Elliott wave and how I'm able to capitalize on counting the substructures and how to identify them, okay? So let's start right now, guys. But before we do this, guys, I've decided that, excuse me, let me have a sip of my coffee here. I decided to only have 1,000 students for the support group. It is literally impossible for me physically to reply to every single person. And I personally believe that this is an incredible value for the course that you guys have already purchased. Though I will only be accepting 1,000 students for the support group that will run only for 4 months from November the 2nd to February 28th, where you guys will have 4 months of solid support for course number 1 and for course number 2, where you guys can contact me on Udemy, and I will be spending the entire 4 months answering all questions that you guys have that pertain to course number 1 and course number 2, and it sells for $200. So consider signing up if you guys would like 4 months of solid support. I plan to absolutely do nothing, guys. I want to have a solid army of baby whales where you guys will do technical analysis for me and where you can also help me in the future. Perhaps we can work together. You never know, depending on how good some of you guys might get, because I eventually want to train a massive army of many good traders. So please consider it. All right, let's start this, guys. Introduction to Elliott wave theory, lesson number 7. Woo! Let's get into it. So I'm going to recommend a book first of all to you guys, okay? I'm going to recommend 2 books that are very important for you guys to consider getting. The first book is this one right here. It's called Elliott Wave Principle, okay? There's this one right here. Elliott Wave Principle, Key to Market Behavior. It's an extremely important book for you guys to pick up, in my personal opinion. It's by AJ Frost and Robert Precher, okay? And the second book that I highly recommend is the Elliott Wave Visual Guide. This visual guide is a phenomenal book, guys. It's got so many different visual, oh no, not that one. Actually, yes, it was that one. This is lower. So check this one out right here. It's a little expensive. It's about $50, okay? But you know what? It is absolutely a great book for you guys to take a look at. And I think these 2 books alone, the Elliott Wave Principle Guide or Principle book, and this one right here, absolutely pick it up, guys. Please, please, if you're considering any type of literature, pick it up. And another thing I also want to recommend is that this one right here, the AJ Frost Robert Precher book, there's basically a book of it online if you guys would like a summarized version of it, okay? The summarized version of it, just do this, okay? Type in Elliott Wave Principle PDF into Google, and it is this one right here that I will also put in the description below for you guys to download. It's in a PDF format. Okay, so let's summarize a little bit about what the book says so we can add some of the theory into this and also add in a lot of practical applications, okay? So what is Elliott wave, okay? Elliott wave, in my personal opinion, Elliott wave is a way for us to gauge the market based on running and stopping, running and stopping, running and stopping. It also deals a lot with Fibonacci numbers, Fibonacci retracements, Fibonacci extensions as well. And if you guys are not familiar with Fibonacci, which you should be, okay? You should absolutely be familiar with Fib retracement and Fib extensions. And the Fib extensions, or the Fibonacci numbers, is a sequence of numbers that's found everywhere in nature. It's a beautiful set of numbers, especially the golden ratio, 618. The golden ratio is a is a division of numbers, and it's a part of the sequence that's found everywhere in nature, ranging from the way the galaxies are actually shaped to the way to the way they're spiraled, to the way our bodies are proportional to each other, to the way sand is shaped as well, to the way architects design buildings, to the way our genes are actually coiled in our DNA. So it's a beautiful set of numbers that's found everywhere in nature, and the best part is it's actually found in the stock market as well. So the way that they describe it in the book is this, okay? Let's read it together first of all. Not all of it, but just some of the important terminologies. Elliott wave described consists of impulsive waves denoted by numbers and corrective waves denoted by letters. An impulse wave is composed of 5 subwaves and moves in the same direction as the trend of the next larger size. A corrective wave is composed of 3 subwaves and moves against the trend of the next larger size, okay? So a great way to take a look at it is like this right here, okay? So now you're gonna have, for example, 1 big structure and then 2 coming down, 3 going up, 4 and 5, and then you would have, for example, an A, B, and a C coming down. But within each big 1, big 2, big 3, big 4, big 5, there's actually many other small waves that break up and make up for it as well, which we'll go over completely in high detail. And there's also different ways to annotate this. The different ways, for example, is we're using different Roman numerals, and we're also using a smaller case with different types of brackets that will denote how big the wave degree is. So for example, on a sub-minuet, that would be done on like a 1-minute chart, right? And you'd be using very, very small characters. But if you're on a massive grand supercycle, these ones are taken over the period of years, right? The one that I normally use is minor because it has a standard 1, 2, 3, 4, 5 and big capital letters, A, B, C, uppercase. And I also use minute, okay? And I also use minuet as well. So these are my 3 favorite ones to use. So what they say about applying the wave principle is that we want to be able to identify pivots, is what they would call it. We want to be able to identify lows. We want to be able to identify where it's consolidating. We want to be able to identify when it is on an uptrend so we can actually short the market, right? So for example, if it's in a consolidation triangle phase, well, then we want to see where the end of this possible triangle can break out to the upside or the downside. If it's on an uptrend and we might have missed it, right? We might have missed, for example, the 1 wave going upwards. Well, now the 2nd wave is correcting. We want to be able to catch the breakout for the 3rd wave. But let's say we missed a lot of that as well. We want to use Elliott wave to identify where a possible peak is so we can actually start shorting the market. And for Elliott wave, the great thing about it is there's something called an alternate interpretation, okay? Alternate interpretations, or just an alternate count is what they say. An alternate count is not your main count. So you'll have a main count that you believe to be correct, but you'll have perhaps a few other counts as well, okay? They have a lower probability than the preferred count, but they're still an essential aspect of all wave principles. And as we were talking about earlier with Fibonacci relationships, one of Elliot's most significant discoveries is that markets unfold in sequences of 5 and 3 waves. The number of waves that exist in the stock market's pattern reflects the Fibonacci sequence of numbers, okay? And I'm going to talk to you guys about how this is counted as well. For example, if you have 1, 2, 3, 4, 5, well, that's 5 impulse waves going out, and then you have 3 coming down, right? If you have 3 coming down, well, 5 plus 3 is 13, right? So if you just think about it like that, and if you actually keep breaking down the subwaves, they're additive sequences of each other, and they happen everywhere in nature, guys. Whether it's for growth, for decay, for expansion, for contraction, for progress, for regress. And I'm personally not familiar with the science end of it, and I'm not gonna pretend that I know about it, but I do know that they are found everywhere in nature, and it is just beautiful. So what they say that's very magical to me is that Fibonacci numbers, and especially Elliott waves, they ebb and they flow in all parts of charts. And once we are able to identify where these pivots happen and how to count them, it becomes a beautiful thing, guys, okay? So we're going to talk about just a few different glossary definitions that's very important for us to understand. So think of it like this, okay? The rule of alternation, okay? If wave 2 is a sharp correction, wave 4 will usually be a sideways correction, and vice versa, okay? The rule of alternation is what they call it. So if, for example, wave 4 was sharp, okay, and then that means that wave 2 would be a sideways correction. Or it's basically saying whatever wave 2 is, wave 4 will usually be the opposite. And I'll get to that in high detail, okay? And then we want to talk about the apex. Let me just give you guys a very small example, okay, of the rule of alternation. So just as an example, if we have wave, I'm just going to actually get my toolbars on here. Where do you even get the toolbars nowadays? I don't even know where you get them. I cannot find it whatsoever, but that's okay though. We can find it manually in here each time. So let's say we're in here, okay? There we go. So double click on it, go to minor, and click on show wave. So if this one here is a very sharp correction, for example, wave 2, then that means that wave 4 will actually not be a sharp correction. It'll just be like a sideways correction like that, and it might be elongated, right? Makes sense so far? And then if wave 2 was actually sideways, okay, wave 4 might be a sharp correction instead to the upside. Makes sense? That's usually how it's interpreted, okay? So I wanted to give you guys a clear definition of that. And now we're going to talk about an apex, as stated right here, okay? An apex right here, where it states intersection of two boundary lines of a contracting triangle. So an apex simply refers to this right here, okay? It refers to a place where a triangle will basically meet. So this is referring to an apex. And then we're going to define more, okay? We're going to talk about corrective waves as well. A corrective wave is something that is against the trend. So if we have an impulse wave going upward, then we have a wave coming down. That's a corrective wave, okay? So first of all, let's backtrack a little bit and let's go to a chart or a blank chart, and let's start drawing some of this out so we can actually get a good gauge of what Elliott wave is. So let's just say, for example, we're drawing it on a 1 minute chart, which is a sub-minuet time frames. The way that I see this is a zigzag, okay? Zigzags are my favorite to play, and then we're going to go with an ABC zigzag as well. And then we're also going to talk about flat patterns. We're also going to talk about corrective patterns as well, okay? So we have 5 waves that go up like here, okay? We have 5 waves that go up like that, okay? That is an impulse wave going up. 1, 2, 3, 4, and 5. Now let's make this a little bit bigger. And let's talk about some of the most fundamental rules of Elliott wave, okay? So we have here 1, 2, 3, 4, and 5. Now these are very important rules. On high time frames, okay, wave 4 cannot retrace by more than a wick into wave 1 territory. Then they state that very clearly as well in the Elliott wave book that I'll get into for you guys, okay? And the reason why we cannot do that is because in traditional markets, it's not, for example, actually I'll back up a little bit. In crypto, it can be in a very highly leveraged market. And because it's in a highly leveraged market, you can actually get some overlapping. But let's start off with an even more fundamental rule, okay? It says for it to be an impulse wave going upwards, wave 2 cannot retrace by more than 100% of wave 1. So you can retrace 99.999999%, but if it falls below the territory of wave 1, then it simply would be considered an impulse wave failure. And yes, we have seen this come down here many times before, where it simply just goes down to like 99% and it still counts as an impulse wave up. And then now that wave 2 has formed, we also say to ourselves this rule, okay? So 1, I'm just going to write it down here quickly for you guys. Wave 2, let's make this a little bigger so you can actually read it. Wave 2 cannot retrace by more than 99, we'll just say by more than 100%, okay? Of wave 1. And now a second very important rule is wave 3 is often the longest and never the shortest. Which means this, okay? It means that wave 3, it doesn't always have to be the longest. It can just never be the shortest, right? So wave 3 is usually longer than wave 1, but if it's longer than wave 1, sometimes wave 5 would be longer than wave 3, which still fits the requirement. So for example, for things like a leading first wave diagonal, sometimes wave 3 is the second longest, right? Because wave 1 is actually longer than wave 3, but wave 3 wave 1 is longer than wave 3, so that means that wave 3 is shorter than wave 1, but wave 3 is longer than wave 5, which still makes it a very strong candidate for an Elliott wave. Now for rule number 3, it says that wave 4 cannot retrace into wave 1 territory by more than a wick, okay? More than a wick on high time frames in a highly leveraged market, which crypto absolutely considers as a highly leveraged market, right? Because we can, for example, BitMEX, for example, Poloniex, Bitfinex, you can leverage quite a bit on there. So now we say that wave 4 cannot retrace into wave 1 territory by more than a wick, okay? Now, the reason why we say that is because we say to ourselves that wave 1 will actually act as a resistance, right? Right here, first of all. So when wave 2 breaks out, wave 3 breaks out right here, wave 1 will act as a resistance. And because it acted as a resistance, on the way down, it's actually acting as a support now for wave 4. Makes sense? And then wave 5 can go upwards to somewhere, who knows where it is, but we'll talk about all of that as well, okay? So a general rule that I like to employ, and it's been working for a really long time, guys, so give it a shot, okay? Because wave 3 is often the longest and it's never the shortest, guys, what I often do is this, okay? I assume that wave 3 will always be, okay, higher than wave 1, right? So let's just say that we always assume that wave 3 will hit generally 1618 Fibonacci region, okay? And the reason why we assume that it will hit a 1618 Fibonacci region is because we expect the wave 4 to come down and then bounce off of the wave 1 or near the wave 1 territory, right? So let me say this again, okay? I'm gonna write this down for you guys to see. Just some general rules that I keep in mind always, okay? I take a 1 I take a fib extension of waves 1 and 2 and target 1618 for wave 3. Okay, that's what I do. So I take it from here. For the people that are not too familiar with fib extensions right now, take it from the beginning of wave 1 to the top of wave 2 to the bottom of beginning of wave 1 to the top of wave 1 to the end of wave 2. Okay, and then you target 1618 because you want it to break out sufficiently enough. Make sense? It has to be sufficiently enough for it to retrace above the wave 1 territory. So then it will actually act as a support, because then it goes back to rule number, what rule is this? Rule number 3, which states that wave 4 should not retrace into wave 1 territory, right? It can sometimes, right? For the first wave, but we're going to talk about all of these exceptions, right? So then if wave 3 tends to hit 1618, we say wave 4 will generally get to near the wave 1 territory, right? And then after that, wave 5, I generally like to target a little bit higher than 1618 because I'm a very conservative conservative trader. But sometimes I will just target right in the middle, but I rarely go for aggressive targets like the 2618. Way too aggressive for me. So now that you guys have the basic idea of what an Elliott wave zigzag structure is, okay? This is an Elliott wave zigzag going up. 1, 2, 3, 4, and 5 going upwards, just like that. Now that we got that out of the way, okay, I'm gonna delete this over here. I'm gonna delete this as well, and that. I'm gonna create a box around here, okay? So where do you guys think the support and the resistance is? Well, one major resistance was right here, right? Wave 1, because wave 4 acted as support there. So now if we talk about an ABC structure, okay, we would generally assume that this would actually act as a very strong support, right? Whoops, sorry, my mistake. We would assume that wave 1 territory and wave 4 territory will act as major supports simply because, well, take a look at it, right? Because wave 1 acted as a resistance, okay? And then wave 4 acted as a support. So would it be very wise for us to assume that we can target somewhere in there to go long? Yeah, absolutely we can, okay? So that's the general rule. I'm going to delete that part. So wave 1 and 4 acts as a support because wave 1 was previously a resistance and wave 4 is now a support, right? So because that happens, we expect ABC to happen like that in there. Okay, now check this out, guys, okay? I'm going to get in even more detailed with you guys now. So if that is considered a zigzag pattern like that, okay, did you guys know that, let's say, on a lower time frame, okay, or in each of these waves as well, it doesn't matter what time frame it is, what you'll always get is you'll get 5 structures in here as well, okay? You'll get 5 structures for each impulse wave going up, okay? Now think about this for a moment. These will always ebb and they will flow in the stock market, and they could be broken down like that, okay? So this one right here, we can say that it would be an ABC. It's coming down for wave 2 corrective wave, right? For wave 4, it's the same as well, okay? And for here, for zigzags, all right, remember this, okay? For zigzags, for the A, they will always have 5 coming down. And for C, they will always have 5 coming down as well, just like that. I'm not going to change the degree of it because I'm simply too lazy, but the one that we should have used is one lower. We should have used minute, okay? Just to be very, very clear about that. I don't really care about the proper labeling, to be honest, because I'm using it on a very different way than other people do it. And I do it for the profit, not to do the correct theory in terms of annotation, okay? And then when we go B upwards like that, you know what? Maybe I should do it. Okay, guys, I'm sorry about that. I'm being lazy about it. Let's go minute. Okay. Let's go minute. And they shouldn't overlap like this at all, okay? I'm going to show you guys the proper way to do it as well, because I don't want to be lazy with you guys at all. I want to make sure that we all understand this on the same level. I want to show you guys how to properly annotate actually as well. I was not going to, but I realized it's probably very important to a lot of you. It's definitely worth your time. So let's annotate this properly, okay? The thing about TradingView is that they overlap, right? Because they overlap, you unfortunately have to just settle with the way that it is. But let's say that you actually, if you want to do it right, you have to do it like this, okay? You have to do it with just lines like that, okay? You have to do it like that, you know? For example, like that. And the greater degree should always be the furthest away. But now if you want to draw 1, 2, 3, 4, 5, you can actually do this as well, okay? 1, 2, 3, 4, and then 5. And then you could double click on it and take out the wave. Then now you got proper annotation and it's actually spaced out properly, right? But that is honestly a very tedious way to do it in my personal opinion, and I don't do it that way because there's no way you want to draw these individual lines. So what I do is I just simply just do it the other way where I'll just overlap it for the sake of convenience like that, right? So think about this, guys. Take a look at this right here. This structure just right here. This has 1, 2, 3, 4, and 5 small subwaves in it, right? And that actually makes one entire wave, right? Well, now if you think about that, what is the difference between this one making one big wave as well, okay? This one making one big wave. Make sense? Right? And then what is the difference between if this right here is actually just the second wave coming down to make 2. So this had 1, 2, 3, 4, and 5, which made 1. And this one came down and it made 2. And it has A, B, and C. What is the difference between all of this making 1, 2, 3, 4, and 5 to make 1? Okay, I'm just going to write it up here. 1, right? And this one right here is 2. Make sense? Right? So now let's actually delete this, okay? Let's delete the very small ones now that we understand. Okay, so this one had 5 in there, right? To make ABC. So is that possible right here, the way we're just looking at here? 1, 2, 3, 4, 5. And then this one has ABC just to make the second wave, right? Make sense? Now let's zoom out even more, okay? Let's zoom out a little bit more and let's ask some more questions. Well, if this was 1 right here, well, we're going to go to a high time frame soon, okay? Well, this could be 3, right? Just as an example. This could be 4. That could be 5, right? So now we're talking about 3. We're talking about 4. And we're talking about 5. Right there, right? Right? And then this one here will also have 5 waves inside of here, okay? It'll have 5 waves in the impulse wave up. And then this will have 5 waves as well on the impulse wave up. This will have an ABC in here, okay? As well, right? And now we're actually, notice how we're zooming out further and further? Do you guys notice that? We're going to be zooming out further and further eventually, right? And then this will have an ABC in here as well, right? So this has an ABC in there, which goes to roughly the wave 4 territory. Well, let me ask another rhetorical question, okay? And if this makes one wave right there, well, what is the difference between if I were to call this now one entire wave, right? And now if I call this wave 1 right here, okay? Are you guys following what I'm saying? My logic? So this can get incredibly big, right? So then if we zoomed out even more, right? I can't do it though because I'm on a very low time frame, but let's just give you guys a clear-cut example. Let's go to, say, over here. Okay? So then we have a very small one here, right? 1. Actually, let's make this one white. 2, 3, 4, 5. Then we have an A, B, C, right? And then it just keeps getting bigger, right? We'll just pretend that we're drawing it in there. This one comes down, that one comes down, right? Like that. Whoops, where did it go? There we go, up over here. Okay. I can't really zoom in anymore. I think I gotta zoom in very close to do it. There, this would be better. Just to do it like this. 1, 2, 1, 2, 3, 4, and 5. Is there a way for me to actually remove that right there? Visibility? No, not really. Okay. And then we get an ABC coming down, right? And then this makes 1, that makes 2, that makes 3, that makes 4, that makes 5, this makes A, this makes B, this makes, for example, C, right? And now this actually makes one gigantic wave, okay? Like that. So now that makes 1, that makes 2. Well, let's draw a 3 in here now. Just say, we'll say this is about 3, this is 4, and that's 5, and that makes A, that makes B, that makes C, right? You zoom out even more now. This now ends up making one wave, right? Because this is the 1, 2, 3, 4, 5. This makes the second wave. And now there's a third wave. And that can make 4, that can make 5, right? Do you guys see what I'm getting to is that these cycles, they constantly repeat. And now we're gonna make one big wave over here. And now that makes 1, 2, right? Now it's gonna make a 3, 4, 5. 3, 4, 5, something like that. And then you can zoom out even more, and it just keeps repeating over and over and over and over. So the best way for you guys to get a representation of it is for me to go to the beginning and show you guys this one right here, because they have it very nicely drawn, right? So now you have, for example, here 1, 2, 3, 4, and 5, which makes the first one A, B, C coming down. 1, 2, 3, 4, and 5, and then A, B, C. 1, 2, 3, 4, 5. And then this has in the A wave, remember that, okay? We're gonna go over this very quickly as well. One more time to make sure you guys remember this. In the 5 waves going up always, for an impulse wave, for each structure, there will be, in a very basic zigzag, there will be 5 in here that it can be broken down no matter what. There's 5 in the third one. The third is often the longest and never the shortest, okay? And absolutely, guys, I might be missing some rules, but you know, quite honestly, all that matters is learning how to use Elliot wave from the perspective of knowing how to trade specific structures. And that is going to be the single most important tool in my personal opinion, okay? So now we got 1, 2, we got 3, we got 4, and we got 5, and we got A, B, C, right? So this here makes some waves 1 and 2, okay? So, but then if we focus only on the A, B, C, let's make this very big, okay? And draw it with the proper annotation as well and proper degree. So I'll put this on my minor for the bigger degree. And for this one here, we're gonna get 5 waves coming down, okay? 5 waves coming down. I will change this to a smaller degree. This will be a minute, or minuet, yeah, minute actually. I should probably change this one to major if it's not on there, or minor rather. Okay, perfect. And then against the corrective wave for B, okay, there will be A, B, C. So for every impulse move down, okay, I'm just gonna backtrack a little bit to show you guys, okay? These are the impulse waves upwards. The impulse waves up are waves 1, waves 3, and waves 5. okay? And now the corrective waves down is this one, wave 2, okay? And then wave 4. The impulse waves up have 5, okay? Actually, this one has 3, right, on a zigzag, just as an example. This one has 3 as well, okay? And then going upwards, and this one also has 3. If we look at the B structure right here, all right, this also has 3, okay? In here as well. And this is the green one, guys. This is green right here. This has 5, okay? And also this one has 5 as well. The C also has 5, always, okay? This is called a 5-3-5 structure. 5-3-5 zigzag. That is the traditional name of this specific structure, and that is constantly what I look for, okay? So guys, if A has 5, okay? If A has 5, that means that, take a look, okay? From here, this is A coming down, that is B, and this is C coming down over here as well. Well, if this A has 5, then by default, this one also has 5 in here, right? I'm just trying to draw it in there. Well, how much does B have in the red? It has 3. So in here, we'll also be looking for 3. Well, how much does B to C have, which is also the green one, right? Think of this A to B there, right? Going up there as the same thing as the opposite, but just kind of flipped around. So then this one as well would be 1, 2, 3, 4, and 5 going up, right? So this is how we're defining these zigzag structures. So once again, we get our waves going upwards for going to 1, 2, 3, 4, 5, and then A, B, and C. And for the corrective waves, which will be this one right here, right there from 1 to 2, has A, B, C. It's a 3-wave structure, right? 3 to 4 is A, B, C, a 3-wave structure. And then A to B is also the corrective structure, and that's just A, B, and C. And I don't know if I can zoom in anymore. I can try to, okay? So if you look here from 1 to A, it has 1, 2, 3, 4, 5. And if you look at just this A as well, but the smaller degree, it has 1, 2, 3, 4, and 5, right? Okay, right here, right? It has 1, 2, 3, 4, and 5. And if you look at from the big structure, A, B, and C, that's a 3 structure. So from this, for here as well, it has 3 structures, 1, 2, and 3. And if you look at from B to big C, right, the largest degree, it has 1, 2, 3, 4, and 5, which means that going from B to C as well is B. Sorry, 1, 2, 3, 4, and 5. And that is the basic of an Elliot wave structure for zigzags. So let's look at an Elliot wave structure now. So once again, we're looking for some sort of 1, 2, 3, 4, and 5. And the best advice that I can give to people is to look for these structures after we see a consolidation period. So clearly here, that's a consolidation period after an uptrend, right? So just to give you guys a quick tip as well, reviewing what we've learned, you take your Fibonacci from the previous low range here to the previous high, right around there. And where do you guys want to buy? You guys want to buy right at the golden ratio level, near it. Do you guys see how ridiculous this is right here? Golden ratio range of the Fibonacci 618 number. Bam, that's where you would want to buy it. Another thing as well is you'd want to keep a close eye on right here, okay? On the trend line that is forming as a resistance. So the moment that it breaks this resistance, that's a great place to go long, and you'd want to go into a long position right as soon as it breaks, okay? You want to set your stop loss slightly below here, below the previous low, and then what you want to do is you want to take, for example, a Fibonacci target of at least 1 to 1. I would generally say as a guideline, go from here to here, and to right there, okay? And what do you guys notice? What you guys notice is that it hits a 1-to-1 because we say to ourselves that wave 3 is often the longest and never the shortest. So we're automatically going to assume that that right there is an impulse wave going upwards, right? And this is an entirely different structure from over here. Entirely different structure over here as well that was moving in a channel for an uptrend, okay? So now we're gonna break this down heavily. So check this out right here, guys. After we assume a target of at least a 1-to-1, what I always do is I try, as soon as it breaks, okay, the consolidation, please keep this in mind and please remember it as well. We wait for it to break a consolidation pattern and then we try to count 5 waves. That is what I do. Now, don't get me wrong. I don't think for a moment that I'm an expert at Elliott wave. I don't really care if I'm an expert at Elliott wave or not. All that I care about is trying to identify 5 wave counts, okay? So the way that we would play this is as soon as it breaks out of that resistance, right? If we were to count it ahead of time, it's easy, or sorry, in retrospect, it's easy. But we don't want to do that. We want to be able to identify that, oh, this is a breakout, okay? This is a breakout from this resistance, right? If you were to count it on a very micro time frame, you would see it's 1, 2, 3, 4, and 5 going upwards like that. And this makes an ABC coming down. So now the next thing that you want to do for Elliott wave structures is this right here, okay? You'd want to say to yourself, all right, we're going to use this point right here as a breakout region for Elliott wave, okay? And we're going to say to ourselves, okay, well, if that was the first one, we're going to assume a target of at least 1-to-1. Bam, it hits that target. And then what a lot of people will do is this, okay? They will say, okay, that's the third, that's the fourth, and that's the fifth. Absolutely, you guys are right about that, okay? But I'm going to show you guys something as well. That wave 3 is often the longest and never the shortest, okay? So if we assume that this right here was 1, 2, 3, 4, 5, it would be 100% right for you guys to think that. 2, 3, 4, 5. It fits all of the criterias, which is wave 3 is not the shortest. It's longer than wave 1, but it's shorter than wave 5, right? Wave 4 did not retrace into wave 1 territory at all. So this fits it. But what the heck is the rest in there? All right, I'm going to show you guys how to play this, okay? So we say to ourselves, wave 1 is the resistance right there, and it actually broke out, right? So you'd want to buy it right around there on the breakout, okay? That's where you would want to buy it, guys, on the breakout, and you do a fib extension right there, okay? Let me show you. You want to do a fib extension of at least 1-to-1 or 1618, and then after it does that, right, it hits the target pretty much right on the nose. If you notice it, right, about 1618 right there, bam. And then you would say, okay, it's wave 4, but what the heck? Why is wave 5 so strong? Well, if wave 5 is so strong like that, then you can automatically assume that it might actually be something different, right? It might be like this instead. Well, we're getting a 1, a small 1, right? We're getting a 2, and we're getting a big 3. Well, does that mean that there's another 4th wave and a 5 waves? Because then this one makes 1 wave like that, right? And then we end up getting 1 down. And there you go. And you would actually end up getting 5 waves here instead. Check it out. 1, 2, 3, 4, and 5. And you actually end up getting the subwaves in here. The 1, 2, 3, 4, and 5. Right? So let's check this out right here. And so you guys know exactly what I mean. So is it possible, because this third wave was so strong, that it was actually the third wave of the third wave, right? So that's how we have to logically deduce it. And now that makes a lot more sense, doesn't it? When we're drawing it on this time frame, or with this degree, 1, 2, 3, 4, 5. And now we will actually draw the pivots. 1, 2, 3, 4, and 5. Now that is a beautiful Elliott wave structure, isn't it? Take a look at it. This is a coin called Key, all right? Now, doesn't this make a lot more sense? 1, 2, and that makes the big 3. This makes 4, that makes 5. And now this is making a 1, 2, 3, 4, and 5 going upwards. And then now that that is done, we want to look for some sort of ABC correction in here, right? But that is going to be more so for the advanced course because we're also going to talk about wave failures. But just to give you guys a basic idea of how I look at it is like this, right? I look for some sort of resistance or a trend line that's established. And then I look for a breakout, okay? I look for a breakout, and as soon as it breaks out of it, that is where I want to buy. So notice that the breakout is also happening right after it breaks out of the 55 EMA and it bounces above it. Well, that's where you know it's a good time to go long, right? So, but we don't know what type of structure this is yet because we haven't learned about it yet. So what we want to do after we've identified a clear 5-wave breakout where this 1, 2, 3, 4, and 5, we try to look for some sort of ABC pattern, right? So the thing about here where it gets advanced is, yes, we can identify this breakout right there. If we go to a higher time frame, it's even more clear, right? If we go to an even higher time frame, it's even more clear that it's something perhaps like that even, right? Just something like that in general. Just generally speaking, it looks something like that. Right here, it looks like there's some candles poking through of it. But if we go to a higher time frame, we also just acknowledge that some of these regions are just bull trapped regions, right? And it gets tighter and tighter in here, as you've noticed, right? It's tighter and tighter in there. This one is the lowest point right there as well. So we try to break this down to some specific structures where we simply don't know where it is quite yet or what it is since we haven't learned it. But just as a possible example, this could very well be just an A, okay? B, this could be a C, that could be a D, and this could be the final E structure coming down, right? Where it's making kind of like a triangle pattern, like that in there. You guys hear me? Do you guys see exactly what I'm talking about? Where it's making a triangle type of structure, right? So now it could possibly break out because it doesn't always have to be an ABC. It can be an A, B, C, D, E structure as well. And that's generally how these are classified when it's a 5-wave structure. So now what a lot of people are going to look for is they're going to see if this is the first impulse wave up, that's a second. If there's going to be a third, a fourth, and then a fifth that goes up somewhere in there. Now, if it does something like that, what I highly recommend for you guys to do is to wait for the retracement, okay? Because if we want to break this down as much as we possibly can, which we'll try to right now, just for example on key, we're going to say, okay, that's 1, that's 2, that's 3 somewhere up there. Let's see if there's a 4 and if there's a 5. If that actually satisfies the requirement, then wave 4 should no more than retrace by a wave 1 territory, correct? Just something like that in here, right? And then if that happens, then we should get a wave 4 will act as a support near the wave 1 region, right? And then we get a breakout, which now this will actually make one large impulse wave. And then what we want to do is wait for a retracement, right? And then the most logical place to buy would be right around there, where the wave 1 and the wave 4 territory end up meeting, right? So you would want to add a little bit to your position here, perhaps, right over here, okay? You want to add maybe 20, 25% of your position to there, and then you want to wait for the wave 3 breakout, okay? And then the moment that it breaks right here, that one, I'm just giving you guys an example where this is wave 1, that's 2, and that's 3, and that is how you would definitely want to play this, just based on Elliott wave. So let's look at some more examples. This lesson is getting fairly long already. I hope that I still have your attention, guys. Let's look at another one. So once again, the general rule that I personally follow is I'm looking for some sort of very identifiable correction that is establishing a very firm resistance before I go long. So just as an example, if you look here, this was a period between, this is on a 6-hour chart by the way, a period of about 50 days, long time. And if you guys remember this right here for IOTA, I sure do, that was established for a pretty long period of time, right? Over here, you consider some of these regions a bull trapped region, right? If you, depending on what time frame you're looking at it at as well, especially, okay? I'm going to zoom out here so you guys can see. Do you see how it's intersecting a lot of these typical regions, right? That's the best way to have drawn it. And I remember a lot of people were eyeing this, especially after this one was formed, this region, and then this one, right? So we would have had a line roughly like that, just something roughly like that, that created a slope, and then you would have extended it, and you would have got something kind of like that, perhaps. Okay? That's a good way to say it as well. All right, so we see this resistance, once again, that is sloped, right? Now guys, I'm not here to teach Elliott wave, to make you an Elliott wave specialist. You know, that's gonna know every corollary, every single pattern, every single way to count it. I'm here to teach you guys how I make profit based off of Elliott wave. And that by far is one of the most important things in my personal opinion, okay? So what I like to do is I like to look for Elliott wave structures, okay? And especially resistances and supports first of all. Now what we can see here is we see a triangle, right? We see a triangle. And clearly it's gonna do something in here, right? In Aprilish, right? It's a symmetric triangle, and it was very likely to break upwards if we look at here. So, you know, just to give you guys a quick taste of it, right? We're seeing a series of lower lows on price, but all of a sudden we're seeing a higher low right there. So that would have been an incredibly good time to start accumulating it in there. That spiked up quite a bit, right? Okay, now let's go over this, for example, on a 6-hour chart. When you see it break out of here, let's zoom in very close, okay? You see it break out of here, and now you're gonna count 1, right? You're gonna count 1, and then when it breaks outside of a resistance, it likes to test that former resistance that's now a support. Make sense? Okay, that's what it always likes to do. And now what you're gonna try to do is you're gonna try to go to, for example, a little bit of a lower time frame. Let me just zoom all the way back over here now. Get back to April. There we go. Right? So you see this in here. And it's very clear once you identify it on a lower time frame, okay, that this is now a 1 structure. That's now a 2. That's a 3. That's a 4. And that's a 5. You got to make sure that you understand that for Elliott wave, the third wave is often the longest and it's never the shortest. It doesn't mean it's always the longest, because we're going to talk about different patterns later, like ending 5th wave diagonals, leading 1st wave diagonals, and more. So if this one right here is the first wave going up, right, then that means that most likely this is the second wave right here. And we got a very, very small first wave and a very big third wave actually, okay? So this one here would be considered the second wave. That's how I would personally play it and count it, okay? And then now I know, okay, so we're gonna draw resistance here. Once it breaks above the first wave right there, I will always, always try to count on a lower time frame. 3 subdivisions for a wave. Make sense? So I would count 1, 2, 3, 4, and 5. Okay? And then we get a third wave retracing down that barely retraced because it was so bullish, right guys? And then we get a 1, we get a 2, we get a 3, we get a 4, we get a 5, and then we get the big correction over there, right? So let's count this together just as an example again. Okay, we're going to count this as 1, 2. This one is the third wave. This is the fourth wave, and that's the fifth wave up there. Okay, and now we're going to break it down even further into the small subdivisions, 3, 4, and 5. And then this one is going to be the same thing for a minuet. Just like this right there. See how it's 1, 2, 3, 4, and 5 going up. And then now we're going to get the same thing here. 1, 2, 3, 4, and 5. Make sense? Okay. Now that it's very important, guys, that we know how to count this in terms of understanding that for 5-wave structures impulsively moving up, that it's always going to break as well into 5 subdivisions inside of each one. 1, 2, 3, 4, 5. The first one will be much more difficult to count because it's usually the smallest. Just like that, right? That's generally how we would play it. And then what we would do is this right here. We would buy it above the breakout of the first wave, okay? That's what we would do. Buy it above the breakout on the first wave as soon as it goes up with more volume. Some people generally like to take profit when they count their third wave, which is what I do when I used to swing especially, and this can be applied to any time frame. So we're going to go 1, 2, for example, now we'll go 1, 2, 3, 4, and 5. As soon as this fifth wave is formed within the third sub-wave, that is where I will take some of my profits, some off of the table, okay? And I would wait for a retracement of some sort, right? I'd wait for a retracement of some sort. Hopefully, I would buy it above around, between 382 and the 618 fib level, but sometimes it never does that. And because it never does that, if I haven't taken 100% of my profit, I will draw a resistance right above the wave 3 right here, okay? Right above the wave 3. And then what I'll do is I'll buy on the breakout above there, and then I will try to count the 5 waves leading up to there. And the way that this is counted is very simple as well. We would assume that the third wave is always the longest, right? So wait, this is what you guys want to do, okay? You want to wait for, this is how you count Elliott wave and how to begin. That's a really important question. Where does it begin to count? The count is usually formed when you get a low that does not retrace lower than this point, right? And then doesn't retrace lower than that point, and then you treat this as a resistance. And if the moment that this one breaks higher, that is where the second wave ends, and this is where the third one begins. So in this particular case, we're looking at here, 1, 2, right? Just like that. And then we say to ourselves, all right, well, this one right here is now a resistance. It didn't break lower than the wave 1 territory, right? Where it originally began. And that's the resistance for the wave 1 territory up here. So because that is the resistance for the wave 1 territory, we say to ourselves, if it breaks above here, that is now where the wave 3 is. So we're just going to, put a 3 up there arbitrarily for now and say to ourselves, okay, 1 just finished, 2 finished. Because the third wave is breaking up to here, that is most likely the beginning of a third wave. So then we try to count 3 waves as well in here, and that's very difficult to count, right? The way that I would do it is I would look for the deeper retracement. And because this is the deeper retracement, we know that this would be a 4th wave. And the 5th wave here ends up making a diagonal of some sort. Notice how we're getting this diagonal just in here, like that, right? If I draw it with an actual marker, you guys would be able to see it a lot better. So there we go. Makes sense now? It makes an ending 5th wave diagonal, and these ones are one of my favorite patterns to play, which we'll talk about in the advanced lesson for Elliott wave. So what I highly recommend that you guys do is please make sure that you're going over all of these structures and you're looking for ways to count. So the way that I gauge it is I like to look for breakouts, once again, outside of consolidation patterns. And once I see it breaking outside of a consolidation pattern, I like to count 5 waves, right? So just as an example, if I were to look at one, say right here, okay? Just even right here, I'm just gonna count it arbitrarily right now. I'm gonna look for something right around here, okay? Doesn't that look pretty good, guys? Just doing it something like this perhaps, right? Check that out. We're getting a clear resistance. This is one way after as well, right? Now, this could be an ABC correction going upwards as well. You simply don't know that, but I'm just going to highlight it here so we can try to break it down as well to see if this is actually an impulse wave going upwards. And I'm going to talk to you guys about what I specifically look for when I enter. There's a lot of material, guys. There's so much material if you've noticed, right? All right. So that's pretty heavy, right, from what we see so far. Now watch this. Let's see if we can actually get a 1-to-1 on here, okay? Well, that one actually does not hit a 1-to-1, so it must be an ABC. So just to give you guys a little bit of a taste for how ABCs work, right? Which will be in the advanced lesson, and we'll end it right after this. So if we get a correction down, okay, where we're getting an A down, a B, and a C like that, okay, we usually get a zigzag coming down, we'll just say for now, and then we get an ABC going upwards, ABC going up, and then this one coming down in a 5-3-5 typical pattern would be like this coming down, right? Now let's evaluate just this right there, okay? Let's evaluate that in high detail. This specific structure right here. Okay, we're gonna pretend that this was just B right here, okay? And you know, this is A coming down from somewhere way up there, right? And then there's a C somewhere like that. But I want to make this really large for you guys to see. So this is now, right? This is now A. This is now A. This is now B right here. And this is C somewhere way down over here. Okay? So you guys can also decide where you would like to enter. I personally like to go long on A. Okay, I like to go long on A, and sometimes I will short on B, and I will definitely go long on C. So I go for the major pivots. So now, if we look at here, this will actually be seen like this, okay? A, B, C. Notice that this is a 3-wave structure, right? So if we actually zoomed out, and we drew this right here as the 1, 2, 3, 4, 5, okay? Let's get on the right degree, a smaller degree to make it make sense, because we want to annotate it properly as well. Let's say we go to a minute, just like that, okay? Sometimes if the A is long enough, right? Like as in this whole structure right here moves, say, you know, 5, like a large percentage, sometimes I will wait for 1 to form, 2 to form, and then when it breaks this structure, this support at the wave 1, that is where I'll actually end up shorting it as well. And we'll see many of these cases in the next video series, or sorry, in the next lesson video. And then this one here is 1, 2, 3, 4, 5, 3, 4, and 5. Notice how there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. So because there is a 13 count, look at this, guys. Fibonacci numbers, okay? Guess what? Fibonacci number 13 is actually one of them as well, right? So if you take a look at all of these structures, for example, this one right here, right? This is 1, 2, 3, 4, 5, and then 6, 7, and 8. Well, the 8 is also a Fibonacci number as well, part of the sequence, right? This is still going on for the Udemy challenge where I'm still buying things just to see if I can get more trades in for you guys. If you guys are not familiar, I started with a Udemy $10,000 account just for Bitfinex, and I spent 20 trades growing it, and I actually ended up growing it by about 33% in 1 month. That is a big amount, because 33% of, say, 14K is even bigger, right? And then you take 33% of that again. I mean, if you take it in 3 months, let's say we did 10,000 times 1.33, and then times second month 1.33, and then times that by third month 1.33, right? That's actually big. Let's say we went to the 4th month, times the 5th month, times the 6 months, times 7 months, times 8 months, times 9 months, times 10 months, whoops, times 10 months. Oh, I completely stopped it now, but you guys get the idea, right? I'm gonna actually try to find it here for you guys in my documents here. Actually, no, I can't do that. My apologies. But let's just, you know, as an example here, calculator. It's actually kind of cool if you look at that. You'd start with $10,000, annual addition, nothing, 13, let's say 12, 33.33. We would actually end up growing it if we kept growing it by 33% each time, right? That's actually a really big amount if you think about that. We're taking 33% times 33% times 33% each time. In 1 year, it's possible to grow it to $316,000 if you guys actually compounded it. Let's see if that's actually true, okay? Times 1.33. 1, 2, 3, 4, 5. That's 6, 7, 8, 9, 10, 11, and last one. Oh no, it was earlier. So it was about 307,000. Yeah, around right. Seems about right. I went 33.33 here. So yeah, you can actually grow it to an astronomical amount. And that's what I'm trying to show you guys as well, which is crazy. So anyways, let's evaluate this specific structure right here. I like to go long on A, and what I look for is 5 waves going up, okay? Like that. Because the A will always have 5 waves, just like how this A right here has 5 waves coming down, right? So think of this big structure as A, B, C, which is a 13 wave structure, right? 5, 3, and 5 is 13. Well, how many waves does the B originally have, guys? B has 3, right? Okay, so if B has 3, then what we're going to say is that the B in here, the small one, is also going to have 3 as well, right? It's going to have 3 as well. Let's get this to the right time frame as well. And then this one will also have 5, okay? 1, 2, 3, 4, 5. So I like to evaluate it. I only play it from this structure, right? This is how I'll play it. I'll play that structure. This structure right here, I will ignore, okay? I will ignore that structure. I do not short it or anything at all, okay? I will go from A to big A to little a in there. And then I will try to catch the B, and then I will play the B to go long. That's what I do. I have a lot of these strict criterias, and I'm teaching you guys how I trade, not how to do Elliot wave like a genius with pure theory. I'm teaching you guys how I just simply view Elliot wave and how it has made me a lot of money in the market, okay? And then once I catch the ABC, I will generally try to short this whole point, right? But I don't generally short this right here, okay? I'll generally short it from here, okay? Like that, because I wait for a wave 1 to form, and then a wave 2 to go up, and then I will wait for the break right here, the break of wave 1. Just like how I will do the same thing here, okay? I will wait for the break right here, and in this zone is a no trade zone for me. That one right there is a no trade zone, okay? This one right there, the red. Because what I will do is I will wait till this structure is broken, this support, and then I will short it right there, okay? So if you look at B here as well, look how many waves that we count just from this B to that B. You get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 as well, right? So now let's go take a look at this structure over here, okay? This one most likely made some sort of 5-wave structure coming down, right? Where we don't need to, if we missed it, that's okay, right? We're gonna acknowledge it as some sort of 5-wave structure. That's most likely something like 1, 2, maybe even something like that. 1, 2, 3, 4, and 5. Then 1, 2, 3, probably something like this, I'm guessing, just to break it down evenly. Maybe it was a very extended type of 5th wave, you never know, right? So we just check things for fun. We can check it from here to here. We say, okay, that's a pretty bad bounce, but just generally speaking, that could be a very correct assumption. But regardless of where it is sometimes, guys, it doesn't matter too much if you don't catch all of this as a short, right? What matters is you identify the resistance that's acting as a hard resistance. Simple as that, which is this massive line right here, okay? And you also see it kind of confining a little bit to this area, right? Into kind of a triangle, a squeeze in there. So now that we got the ABC structure out of the way, right? We're gonna assume one of a few things, okay? So let's say right now that we're going to assume that this is the first wave going up, because it clearly is, right? First wave going up. Now what do we do, guys? After we identified a bounce off of here, the next thing, or before that even, you try to catch it if you see it's an impulse wave going up, right? And clearly this is an impulse wave going up because we see 5 structures in here. 1, 2, 3, 4, and 5 going upwards, right? So we try to catch it somewhere between the 382 and the 618 Fibonacci region in that red box, right? We try to maybe add a little bit to our position. And then the next thing that we do is we identify the resistance for the first wave, okay? The first wave going upwards, just like that. And then we will buy more on the breakout right over here as well. Make sense? Definitely, it should make sense. Now, we're gonna get into this in the advanced course, but what I wanted to talk about really quickly is ending 5th wave diagonals, right? Just kind of something like that, where it can happen like that, where the first wave is often the longest, the second wave comes down, the third wave is actually shorter. That's right, it's actually shorter, okay? Then the first wave, then the 4th wave comes down, then we get a 5th wave, and that's generally what could happen. Or this might even have made a channel, right, of some sort, where there's almost an overlapping. But either way, we have to assume that the 3rd wave could actually be a C wave, okay? Let's just say, hypothetically, we have 5 waves going upwards where we're assuming it's going to be a 5 waves, right? And let's also say we're assuming that it's the B structure that we're talking about. Well, if you think about it, this highlighted region right there could be the same as this highlighted region as well, right? Because that's 1, 2, 3, and this is also 1, 2, 3. This also makes 1, 2, 3, 4, 5 in there. So this region right here, I'll draw it out to be very clear. 1, 2, 3, 4, 5 makes the same thing as 1, 2, 3, 4, 5 in there as well. And then this also makes 1, 2, 3, 4, 5, right? This also makes 1, 2, 3, 4, and 5. This right here makes A, B, C, right? So these structures could actually be the same. So we have to be very clear and say to ourselves, well, this could be 1, or it could be little a, right? It could be little a, because we have to say to ourselves, well, this here could be A, right? And this right here could be B, going upwards. Notice how this is picking up really fast in the course, guys? I wasn't screwing around when I said that this course is going to be much more difficult than my first course. And it's up to you guys to watch this over several times, because you will not get this the first time. This is an immense amount of knowledge that I've accumulated over 3.5 years. So we say this could be 1 or A, okay? And then we say to ourselves as well that this could be, don't annotate like this, I'm just giving you guys an example. This could be 2 or B, right? It could be one or the other. We just don't know. But because we clearly see here that this is just making a 1, right? 2, and that's a third wave where it becomes smaller right there. I would definitely say that this is kind of like an ending fifth wave that goes in there. And therefore, we've now confirmed basically that, okay, first of all, third waves, I need to be very clear, okay, are not choppy. The third wave, remember this, write this down, guys, okay? I'm saying it firmly right now. I'm looking at you guys and telling you to write this. The third wave always moves impulsively, okay? And when I'm talking about the third wave, I'm talking about this third wave going upwards like that, okay? Like that. If it goes something like here, where it goes, you know, something really ugly like that, don't count on it to be a 1, 2, 3. Count on it to be an A, B, C. And also, if this is the A wave coming down, okay, and it is indeed a zigzag, always assume as well that the third wave will always be like that. If it's not, it could be something entirely different, like a flat or a 3-3-5 structure as well, okay? So this is now moving really choppy. You do not see ending fifth wave diagonals or diagonals in general in the third wave, but that is all saved for the next course, okay? So because we see this as a possible 1 or A, and we see this down as a 2 or B, and because the third wave is now really choppy, we know for a fact with certainty that this is actually a B point, and that would have been a very, very good short. And we also ended up confirming it down the road as well because it broke past here. So obviously it's not. So, and the moment that it falls through the wave 1 territory, notice how it gets to wave 1 territory, bounce, bounce, almost got there, bounce. And here's finally the break point. Well, the moment that it breaks below here as well is the moment that we say to ourselves, bam, this is not a fourth wave coming down, and earlier was indeed an ABC. So I hope that these two examples have really helped you guys. Try to look for a lot more examples yourselves. And do you guys know where my examples will come from? They're going to come from the 6 hours of live trades where you guys are going to see me do a lot of Elliot Wave in real time. So I hope that you guys have really enjoyed lesson number 7, where we talked about an introduction to Elliot Wave. It is not the only way to trade. You have to keep in mind that Elliot Wave is just an addition to the way that I trade existingly already. And I've got a lot of weapons, guys, up my sleeves. And lots of these weapons are used at different times, okay? If you guys would like support, consider purchasing the $200 support package that I have that will grant you guys 4 months of support from November 2nd all the way till February 28th. And I'm not going to be taking many people, guys. I don't simply have the manpower to physically have all these people, to have responses to every single person. And I want to keep my group incredibly small and tight. So consider purchasing that as well, guys. And I'll see you guys for lesson number 8, where we're going to talk about intermediate Elliott wave theories. And we're going to talk about more corrections. We're going to talk about failures as well. We're going to talk about so many other topics where lesson number 7 will just look like it's a beginner, an introduction. So have yourselves a great night. I hope these lessons are not too long for you guys. And I most importantly hope that you guys are taking a lot away from this class. I put in a lot of effort and time because I want you guys to get to my level. You guys have seen the profits that I make some days, some months, some weeks, and they are pretty good. I can't complain about them, right? To say in the most humble and modest kind of way. But I definitely want to see a lot of people out there as well. And you guys know what? When you guys also make it in the market, you guys have to do me a favor, okay? One of two things, two things you'll do. One is you guys will also teach other people and help them succeed. And the second thing that you'll do when you guys become a billionaire is you're going to buy me a 33-feet yacht. Simple as that. So anyways, guys, see you for lesson number 8. Bam! Hope you guys took a lot away from the class. See you later, baby whales. Bye now.